Welcome to this Educational Investors Insights. I'm joined here with Ty Miller, and today we want to talk about stock market indexes. Now, in our vlogs and in conversations, we often reference the stock market. We're talking about the market is up X or down Y. And oftentimes we gloss over the fact that there's many indicators of what the market is, and there's a lot of indexes that people use to reference the market. So Ty and I felt like it would be helpful today to go over some of those indexes and what's the difference between them. So thanks for your time. Thanks, Ty, for putting this together.
Yeah.
So what are the differences of several of the most popular indexes?
Yeah, so there's thousands of different indices in the U.S. and worldwide. Three of the important ones that we kind of focus on here are the S&P 500, the Dow Industrial Average, and the NASDAQ. Those are three that you'll commonly see on the news. The differences in them, the S&P 500 gets its name from basically 500 companies, the largest companies in the U.S. that are publicly traded. The Dow Industrial Average only has 30 companies in there, and those components change every so often. And then the NASDAQ is mainly tech-related.
So, Ty, of the three indexes, do they all have the same companies, or are they different? Do they cross indexes?
Yeah, so the Dow and the S&P can cross, certainly, and so can the NASDAQ. They can all kind of cross. With that being said, the S&P is kind of the best one to look at. The S&P will give you basically 80% of the U.S. economy overall at any given time. So a move in the S&P is the most telling related to the economy, whereas the Dow and the NASDAQ are a little more specialized.
So the S&P 500 is market cap weighted, but it's the 500 largest U.S. stocks weighted by the largest stock making up the most of the index all the way down to the 500. So if it moves and it's up or down, chances are your portfolio has one of those 500 stocks in it.
Correct, absolutely.
And so the NASDAQ, though, is going to be more tech heavy. Why do people tend to follow the Dow? It seems like 30 stocks seems to be the least representative of the U.S. economy.
And you're right, it would be. The Dow is the oldest, kind of got its name at once upon a time. It's one thing that we used to really pay attention to. It's the industrial average, but now they're throwing in companies that aren't as industrial. It's very odd that, we still follow that one to, as much as we do. And the odd thing about the Dow is it's price weighted, not market cap weighted. So, you could have a $120 stock and a $20 stock, and a $1 move in the $20 stock might affect the Dow more than the 120. It's very odd how that works with the Dow.
Yeah, it sounds much more unique index and less relevant in terms of what may or may not impact an investor's account. Mm-hmm. So all in all, the NASDAQ, if you're wanting something that's more tech focused, probably follow that. That's more growth oriented. But the S&P has both growth and value and is much more diversified. So when considering what's a good representative of the U.S. economy, it's probably the S&P 500.
Yeah, absolutely. I mean, if you want to go further down the food chain, you go to like the Russell, 2000 and 3000, which are smaller cap companies. But the S&P 500 is the majority of what advisors or us in the industry are going to reference, and for good reason.
Great. All right. Well, thank you so much, Ty. I hope you found this informative. Like Ty said, there are thousands of unique indexes that are being created, new ones are being created every day. So if you have any questions about this, we'd love to talk more in detail. Please don't hesitate to call or email us. Thank you so much.